Hi, this is Randy Finney with the Right Side of the Chart, and today is Monday, April 16th, 2018. I'm going to do a video with the outlook for the precious metals and the mining stocks, gold, silver, we'll look at platinum, and then I'll run through the components of GDX real quick. I'm doing this mostly as an update or a request from member BTM in the trading room, request for some ideas on gold and silver stocks. And as I'm more than glad to oblige, that's what the trading room's all about. Gold member status, ask for requests, and I'll get to that. I want to just say that my outlook hasn't changed. I'm still uh, uncertain of the next, the near-term direction in gold. I'm actually leaning slightly to the downside, but I'm going to go over. There are some setups that stand out, so I've sorted the components of GDX, flagged the ones that stand out. I'll get to that in a second. But any analysis on gold, in my opinion, or the mining stocks for that matter, because the requests were just for gold and silver stocks. So number one, never ever trade, or with very few exceptions, trade the mining stocks, which is my preferred proxy, by the way. I don't trade gold and silver occasionally, but I use gold GDX or the silver mining stocks as proxies because you get more bang for your buck. They're simply a leveraged play on gold. If gold prices go up 10%, they're going to go up 20% or more. Or in other words, if you can capture the trend, whether it's a bullish or bearish trend in gold, you will, in almost every instance, outperform by being long or short the miners. So that's that. And then, of course, my analysis on gold and silver, or any analysis, in my opinion, is incomplete without looking at where the dollar is going to either confirm or refute that analysis, because gold is directly has an inverse correlation with the US dollar. I've laid that out many times in the past. You can check prior videos or just take a long-term chart of gold, overlay the US dollar index, and you will see that inverse correlation. One goes up, the other goes down, barring the temporary periods of disconnect. So, all right, so we're going to start here with the Euro US dollar. And again, it's an update. I just did a video, I think, last week on this, so there's not a lot new to report. We had a little false breakdown here, and at the day it broke down, I told you I was suspicious of the breakdown, not yet accepting that as a sell signal on the euro US dollar. And for those of you new to my analysis, the euro is the largest component, well over half of the US dollar index. I like to use this chart as one of several proxies for trading the dollar. But when prices are going up, the euro's rising against the dollar, so the dollar's falling. So keep that in mind. This is sort of looking at the US dollar in reverse here. So where we're at is we had a false breakdown. We rallied back up, pretty impulsive move up, back up, but we're still hugging this trend line. And this is a very important trend line. A lot of support in the last year plus here. And so that could determine the next term direction of the dollar. If we break down from it, you can see I have a pretty decent support level here, about 1.20943. That probably get a little bounce back there. Who knows? Maybe a kickback. But I've also laid out this other scenario for a while, which is my preferred scenario, but I don't feel super strong about it. Not enough to bet on it yet. And that would be another thrust up within this wedge to put in a divergent high. We don't have to stop at that purple line. We could hit the top of the wedge, but as long as we take out this previous reaction high right here, then we would have, as you can see here, we had divergence here. We had a divergent high, as we had a divergent high here. You see all the divergences marked. They were followed by corrections. So these divergences do work. This would be a series of 3 consecutive divergent highs. And from my experience, it's usually, if you get multiple divergences, it's that third strike and you're out. Rarely, I don't hardly ever see 4 consecutive divergent highs. It's usually that third one. It's 3 and done. So let's see if we get it. It would set up a very nice short on the euro, which would be a rally in the dollar, and that would be bearish for gold because again, when the dollar goes up, gold goes down, and vice versa. And I'm talking about the bigger trends, so that's why we're looking at this chart. With that being said, my conviction is not strong because here we are. There's some decent support. You can see these support lines here that have been respected. There's this trend line support, which is a very significant level. We're still above or right on trend until you break trend clearly and impulsively. You have to give the benefit of the doubt to the trend. So there it is. That's where we're at, and that's why I'm uncertain on the near-term direction. I'm just going to wait to let this play out. There's some resistance overhead as well, and so also the bigger picture, as you can see, we're sandwiched in that trading range here. This is just like gold and silver, and this is what I've focused on. I'm going to try to box it in. It's this blue box right here. This has been a trading range, a sideways trading range, and that's why I'm staying out of the miners and the metals. If nothing else, because they're so volatile in nature, you get chopped to pieces. You don't want to, me personally, I have no desire to swing trade or position trade for them until we have a definitive resolution, either a breakdown here or something that convinces me that the euro is going to keep climbing and the dollar is going to keep falling. But right now, like I said, I see longer term, intermediate term. It's hard to tell, but longer term, bearish on the euro, bullish on the dollar, and that's not going to be good for gold if that does play out. 60-minute charts. Here's, I've focused on this recently, and this is where traders can jump in. I pointed this out, this little downtrend line or a descending price channel recently. Resistance levels, any horizontal line is support or resistance. We broke out, popped, hit resistance, back tested right here, and then boom, you had a rally in the euro. Means the dollar fell. Now it was a little rally in gold and gold mining stocks that you could have traded. We have resistance here at about 124, and that was at previous reaction high. There were also a couple of levels here, some reactions back there. So far, that's where we've stopped in the euro, and that is resistance. Now you can see what I've drawn here is a potential scenario that shows this. If we do happen to pop above that resistance level, I would be skeptical, and I put pretty decent odds that that breakout would fail. And the reason being is that would be a divergent high. You can see the negative divergence drawn down below. So be careful on a breakout there. It may be a fake out. There's the lines right there. There's negative divergence. So that's the 60-minute chart of the euro US dollar, and we could probably even draw a trend line here to watch. So there's basically a potential rising wedge pattern forming here with negative divergence. And so if it plays out, you get a thrust down in the euro, that's a thrust up in the dollar. Bearish for gold near term, and that's my outlook. Near term bearish overall for gold and gold mining stocks, and then maybe ultimately this breaks down. Okay, that was over 7 minutes talking just about the dollar, but I do think it's very important. Now we'll just dive into the charts of gold and the mining stocks and silver, maybe look at platinum. But here's the big picture, guys. This hasn't changed, and that's why my analysis has been light. And again, I'll do updates by request. This big purple box right here, I didn't get the bottom of it there. This is that comparable trading range. I just showed you it in the euro US dollar pair. We have it in gold and we have it in silver. And this, and if you're a very active trader and you want to buy at the bottom of the range and short at the top or sell your longs at the top, fine. But that's that. And as this line shows you right here, we did have a divergent high right here, and that divergent high played out for a correction. And my concern is that there's a correction and then actually went down a little lower. My concern is if we break out at top of this range, if we punch up through it soon, we're going to do so with additional, more of an extension of those divergences. So again, I'm skeptical of a breakout, even though you might have a little bit of upside in gold. I think that any new breakout to new highs is likely to fail. Silver, SLV, we'll use the ETFs, of course, it's easy. There it is, same trading range, same story, grinding around for the last few months, pretty much most of the year, since some January or so, early February, late January, and that's it. So we need to break one way or another. When this happens, the indicators flatten out, so I don't have really any predictive value from the momentum indicators during any security during sideways trading range because they flatten out. You don't have divergences. I like to see these divergent lows, divergent highs, trend line breaks, chart pattern breakouts, and all this is a chop fest. The market or the precious metals are trying to decide where they want to go, just as so are the currencies, and that's again not by coincidence. All right, now we'll get into the list. This is the holdings of, nope, that's not it. I'll type in GDX and that will pull up the holdings. Here we go. As you can see here, these are the holdings of GDX right here. And what we're going to do, I usually go through the order of market cap, descending order, look at the biggest ones first, but this time we'll make it quick. If you want to wrap up this video, we haven't even hit the 10-minute mark yet. I'm going to go over those that stand out and I'll continue on, but once I get to MUX. That's the only ones that I really see some developments in the chart. All right, FNV, Franco-Nevada Corp. This looks nice. This is like a nice, clean, bullish falling wedge pattern. You can see a breakout here recently. So one of the better ones. Again, I may be wrong in my analysis, and if you're bullish on gold, there's one that broke out. However, you do have resistance levels you have to contend with. So, and we're at one right now. There's a resistance line here. Any line on this chart is a resistance level. So possible that after the breakout we come in and back test because I am near-term bearish on the sector, and then continue on. Or hey, if gold continues to rally, or sometimes some of these stocks, keep in mind, there is a very high correlation among the gold mining stocks, very high. You don't get that in every type of sector. Biotech is a good example because one biotech company has nothing to do with another. They're working on completely different drugs. Some have wider pipelines, some have more narrow pipelines. But when it comes to gold mining stocks, they're all doing the same thing. They're pulling gold and silver out of the ground and selling it. So when gold prices go up, silver prices go up. And yes, there are certain fundamental things affecting a company balance sheet and expenses and other things like that can affect the share price. But for the most part, you chart any of these stocks long term, going back 10, 20 years with a chart of gold or silver, and you'll see that most mining stocks will trade largely in line with the metals. So with that being said, there it is. So if we clear this level, which is at 71.42 roughly, next target's up there about 74.80. Nice bullish divergence, just like we had negative divergence here at the high. You can see all my divergence lines. This was a divergent high, and that led to a correction so far that was 22, 23%. We had a divergent high here. That was a nice correction, probably double digits. Divergent high right there. Divergent low right here. No, sorry, that was not a divergent. Oh, yes, it was. Yes, it was a divergent low. So I just didn't have it marked there. But that's it. That's what I like to look for. And so that one, probably more time than I needed to spend on it. One of the better looking ones. Here's GOLD is a symbol for Randgold. And it's choppy, kind of grinding around like everything else. And there's one or two scenarios. We do have at this point positive divergence right here. You can see with the white lines. But I have a scenario drawn out that I would like to see before I would be interested in this one. I have a decent support level here at 75.45. These blue lines on these charts that I'm going to go through, I put them in today to kind of show you my ideal scenarios where I would look to buy. That line shows you all these reactions back here. This was a formidable resistance level. The stock broke out and rallied hard. So that's a level that if we get down to, it would also set this up. We'd come down here, hit roughly that 75.50-ish level. If we can hold it in reverse, what we would have done there is put in a larger divergent low on the daily indicators here in this daily chart. And that would set the stage for a more meaningful, lasting rally. So there's GOLD, again, one that I personally don't care to take right now, but I might be interested if it got down to that level. RGLD, Royal Gold. What stands out to me is this one's pushing up against resistance. I don't always, some stocks are bottoming place, some are breakouts to new highs. It's hard to argue that 90.46, give or take, that's a pretty significant resistance level. We had one breakout of that level, and it proved to be a false breakout. And that was back last summer. And the stock has been tapping and testing that level on multiple occasions since. So, like I always say, resistance is resistance until and unless taken out. And this hasn't been taken out. So you can do one of two things with a stock like this. Depends on your outlook for gold. Or this particular stock too. You can short, bounces up to that 90.46-ish level with a stop not too far above, maybe on a daily close in case you get a whipsaw signal through there. I'm also noticing on quite a few of these gold stocks too, you'll see these uptrend lines off the recent lows. So that would trigger a sell signal and then take this one back down to the bottom of this. There's sort of a sideways trading range that this one's been in for a while. You can box it in right here. You can see my box tool. So there it is. So either we break out and then you still do keep in mind you have a previous reaction high to contend with. If it does take that out, it's not clear skies yet. Clear skies means once you break out to all-time highs, you don't have any resistance overhead, or at least multi-year highs. In this case, that's not the case. That's not we may fail there and then come back down. So these are just the salient levels to watch, guys. And like I said, I wouldn't personally have no desire to take a position in this one, but those are the levels to watch whether you want to go long or short. KGC, Kinross Gold. I think I mistakenly flagged this one. Yes, I did. I don't see anything that stands out on the chart. Let me remove that flag off that one. All right, next one up, AU. Um, Now, I'm not crazy about this one. In fact, this could be a shorting up. This one's flirting with a pretty critical support level. But as I often say, support is support until and unless broken. And right now, if you would have done well if you bought this stock every time it pulled back to this 893-ish level. You can see there. Or even close to that, because you've had bounces that it may not look like much. It's a cheap stock. It's $9 stock. So even these smaller bounces were double digits. 10+% right here. So again, one of two ways. You can either buy support with a stop somewhat below, ideally on a closing basis. I know these stocks well. There was a little run right there that briefly went below. Sometimes they like to run it. I can tell you there's probably a whole lot of stops both on on longs that are set just below there. So they may try to run those stops before reversing it. So you can also short it if it breaks below there. Let's see what it looks like on the weekly chart. Yeah, not a lot of resistance below. That's a pretty significant level. So do what you want with it, but if it does hold that level, and give you two targets to bounce targets. One would be right here. That's about a lot of these bounces have stopped right around the 990-ish level, and and the rest of them stopped around 1067, 1070 or so. GFI, here's another one again, same story, just flirting with the testing, tapping on this support level about 368 or so throughout, actually going back to December there, it looks like. And that level was also resistance back here. There's a big gap right here. Resistance right there, a level that it failed at. There's a big gap back here. So that's a pretty technically significant level. So same story. You can do this one of two ways. Either buy on pullbacks to 368 and ride it up to either this midpoint line. There's a lot of reactions there. I'd have to turn that level on. I don't have it shown on my chart. Or all the way up to about 429. Here, let me give you this level if you want to trade this one. 404, that's that level, give or take. And I always saw, if I'm going to buy it at 360, if that's support, I'll step in and buy it at 370, maybe 371, and give it a little room on the stop. And if I'm targeting the 404 level, I'll sell it, $3.99 or so. And if I'm targeting 429, I'll also set my sell limit order a little bit below there. But again, it's a lot of the same. It's noise. So longer term traders, investors, just know it's a grind fest. If you're willing to wait these out, if you're bullish long term, then and you're right, then these will ultimately break to the upside. Swing active traders can certainly game off these levels, and sooner or later will break out. Nothing trades sideways forever. Okay, AGI, Alamos Gold, some pretty key levels on here. I put the circle tool here because I don't have a parabola tool on this particular drawing program here. So what I was trying to show here, I'll have to do this. Let me see if I can freehand this real quick. Tool, pen, here we go. Try this. So you can see this rounding bottom right here, potential rounding bottom pattern, and we need to break above that level. There's the top. That was horrible. That's the straight line there. Now be careful because we have resistance just above it here as well. So you'd have to wait for if I'm going to take a stock on a breakout, I'll wait for, if I have two resistance levels close by, I'll wait for the last of the two to break to be safe. So there it is, 594-ish. You can see a lot of reactions to the left of that. That area was very significant support going back for the last couple of years until it cracked recently. So just as it was significant support before, support once broken becomes resistance. So this is the level to watch. And again, there's two ways to trade it. You're at resistance now. Here's a previous reaction. You can short it here, or up closer to 594 with a stop somewhat above for a ride back down to the bottom of this recent trading range, or wait for a breakout Depends how what your outlook is on these stocks and your preference. I know some people don't like to short stocks, so. And there's also a downtrend line to watch as well. So that's actually pretty interesting when I add that downtrend line, because I love to see intersecting areas of resistance for breakout. If it can take out both of those levels, that would be bullish. So there's AGI. And a little over half a dozen left. SBGL, I'm not crazy about this one. It keeps moving lower and lower and lower. I have this line down here because it's only potential divergence. That indicator still, both indicators, the RSI and the PPO, are still pointing down. So this is not confirmed. It's only potential divergence. But when I look at the weekly chart, you know, there's some pretty strong bullish divergences building here on SBGL. So if it can get a nice reversal soon, depends where it comes from, might come down at lower levels. You could have a nice breakout, and this one plenty of upside. But as of now, it's still in a downtrend. It's a catch a falling knife trade, so I would watch out on that one. Here's Tahoe Resources. This one looks interesting because there's another one of my favorite type of setups where we have dual or intersecting resistance levels. I'm not sure why that line's not turned on. Let me turn that on for you. 505 is that level. Nice resistance level there, as well as a downtrend line. So you can see here, it's trying to crack, but this is not, even though it's above both levels, that's not an impulsive breakout. Impulsive means a big green candle, a lot of buying plus volume. I see neither of those right now. So to me, this is um, a breakout that's not confirmed by volume or impulsive move or anything like that. If the stock does manage to get on through there, and especially if the gold mining stocks can rally, first target there is at 570, and then there's I don't see a whole lot of resistance all the way up to about 712. And you can see nice bullish divergence in place too at the lows. So I like that as well. But this one may need another thrust down within that wedge, especially if the sector is going to go down. So it would look something like this. Extend that line, get another thrust down in there, and it still has plenty of potential to keep these divergences intact down here if it does make another low. Okay, sorry I had an interruption there. I had to pause the video. I think I covered Tahoe, finished that one. CDE, this is a silver, and keep in mind, this is a component of GDX. A lot of the components in GDX mine both gold and silver, so there's some overlap. There's some, might be listed as silver miners, but most of them pull, or a lot of them pull both metals out of the ground as well as some other stuff. So there's CDE, looks interesting. We had that downtrend line you can see that was taken out. You have some resistance right here. And it's the same story with a lot of these stocks. It's that resistance level is part of a sideways trading range that this stock has been. Actually, can go back even further, but it's been trading there for months. So we're either going to pop to the upside, and then you can see my targets, any of these lines. As I mentioned, I'm an equal opportunity trader. I love shorting. I love going long. This must have been a trade in the past. The very steep wedge. Looks like we had a big profit there. That T1 was down here. That green line bounced as things usually do when first targets are hit. T2, and then I had looks like a potential third target down here that was hit. And that was pretty much the end. And we went a little bit lower here. But I love this stock. When it runs, this one can really run. A lot of these silver mining stocks can run. But again, this consolidation stuff also acts like a coiled spring. So when these things do break, there'll be a trade, and you'll see my analysis will pick up if the charts become clear, and I'll probably be posting updates every day and throughout the day on the gold mining stocks when I see the next run coming. And it may be sooner than I think, but I just think it needs a little more work here. HL, this is a wedge type pattern. You can see a downtrend line. Divergent low, that looks good. There's a primary primary downtrend line to take out. So if you want to know what I think happens with this one more thrust down within the wedge, ultimately go on to break out between the smaller wedge. There's also resistance there. Get a little reaction, move up here, and then reaction, and then boom. And that one will probably work its way up over time again after a little downside, I believe, up to this at least this 462 level, and quite possibly much more. That's a pretty significant downtrend line. But again, you have to have the gold mining sector, the GDX confirm. NGD, same story. Here's a downtrend line. We do have a divergent low right now, so this one could pop. That's that white line right here. We've just made a slightly lower low. But I see it again, another thrust down, putting in larger divergence. So this would be the wedge line, the bottom line here. and draw. Just imagine I drew another thrust down and then a breakout, and you can see a pretty significant resistance level around 264 right there. That's also a target. So my ideal scenario has us coming down, ultimately going to break out, have a reaction there. Who knows? Maybe put in an inverse head and shoulders pattern. Here's your left shoulder. This would be your head. This would be your right shoulder. Boom, break out and run all the way up here and possibly quite a bit more. SSRM. There's another one of these downtrend lines or uptrend lines I've talked about. A lot of these mining stocks are flirting with these uptrend lines. You can probably see them well on 60-minute charts. So if you're long the miners, be careful. These trend lines break, you're probably going to see a correction. And I don't see anything right now that would make me go long this one. AG, there's another uptrend line to watch coming up on resistance. Nothing really jumps out to me on this chart. Not even sure why I flagged that one. HMY, Harmony Gold. We had a divergent high recently. In fact, this was a big divergent low. We broke out, back tested, perfect back test of that trend line. You can see the trend line I'm highlighting. And then boom, that stock ripped after back testing for a while. And that rally ended with this divergence, negative divergence, and so far that's playing out for a pretty impulsive correction. Now, what I've highlighted, I told you the blue levels are where I might be interested in buying this one. I'd have to confirm it on the 60-minute charts. I haven't done that yet, but this is a pretty decent support level. A lot of reactions here, going all the way back to early January 2017. A lot of reactions on that line, so maybe a little more downside, at least for a bounce trade, especially if these 60-minute charts confirm. And that's HMY. SAND, Sandstorm Gold Limited. Again, another one I must have messed up. I didn't mean to flag that. I'm unflagging that right now. And EGO, this one I really like here. This is a nice, look out, the clean downtrend line. Might need another thrust down within this wedge pattern. You can see very clean divergence. By clean, I mean separation in the PPO lines. Right here, a lot of separation, clean troughs, too clean, equal, or no, I'm sorry, not equal, a higher low, just like we have divergence down here on the RSI. So again, may need another thrust down. And also, I color coded this 104 level blue for two reasons. Number one, it's horizontal price support or resistance, I should say, and it also comes in around with that downtrend line. And the $1 level is almost always a very technically significant level for stocks, because if they fall below there, they have a limited number of time, 90 days, whatever it is, depends on the exchange, or they get delisted. So they either have to do some reverse split to get their stock price up or defend it. So a lot of times you'll see the insiders of the company come in, buy shares, especially when they're this close, 97 cents, to try to get that stock pushed up and above, whatever it takes. Any kind of financial engineering on their accounting, anything they can do to get that stock up back above $1. And so usually when you see a stock that has fallen below that $1 share price, and you usually see impulsive selling. People get out of it. Certain funds have to dump it. They're not allowed to own penny stocks, so you get a lot of forced selling. But from my experience, when a stock does that, if it's only temporary and then they can recover that $1 area, boom, good things happen. So there's about 45% or 40% plus upside here to that 146 target, and then a big thin zone above that if it can get there. So again, a little work to be done. And there's MUX. I'm not sure what stood out to me. This again might have been another one I forgot to remove. I had a previous flag on. That's it, guys. I'm going to stop the video here. I didn't cover all the components. I just covered the ones that stood out to me. The rest, as I go through the lines, the only other one I wanted to make mention, this is one of the largest mining stocks, is Newmont, because we have this double top high here. And you break above 42, that's bullish. But if you fail there, that's a failed attempt at a double top high, and stock's coming back in. And I could go down the line. The rest just don't stand out to me. So I'll do an update as needed. And on a final note, if you happen to be listening to this video still, don't forget, within the trading room, guys, we have these groups that I've added on the side. There's a group for precious metals and miners, which we're at right now. I clicked on that. I assign any trade, and I encourage you to do the same. If you join the group, then you can assign one of your posts to the precious metals miners, anything to do with it, gold, platinum, GDX, SIL, SVL, any of the ETFs, futures, put it in here. And just recently, although I have been standing aside, I did find one that I really liked. It was an obscure junior miner. It was a month ago I posted this one, TORXF. It's an over-the-counter stock, little gold stock. It had just broken out above 760. Nice breakout there, an impulsive candle, and I had that stock. My scenario showed it zigzagging its way up to the $11 area. Well, it went there. It just didn't zigzag. It just went up there in a nearly vertical fashion. It just after the breakout went a little bit lower, extended that divergence right there, and then boom, blasted off and stopped cold right at that 11ish, wherever I had that line, right around $11. So you can pick up a lot of ideas in the trading room. And additional setups that I don't post on the front page. So this one, I wouldn't chase it here right now, but there's a potential downtrend line that comes into play. And I'll, junior miners, these low price, more speculative companies, I'll usually not add those as official trade ideas, but I do post those within the trading room. All right, let's wrap it up here. If you guys have any questions, as always, drop me a line in either the trading room. If you don't want to post publicly, you can send me a private message or use a contact form. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.